Hello, everybody, and welcome to the US session brief. We're on Monday, the 1st of May 2023, approaching 3 p.m. here in Europe. Let's take a look at markets. We'll have a preview of what we've got in store today, this week, and also catch up on what we've seen in Asia. Not so much Europe, because European markets in Maine have been closed. A lot of holidays in Europe today, but happy May to everyone. We have a big week with the Fed on Wednesday. We've got Apple earnings on Thursday and jobs data on Friday. Not to mention, we have the Berkshire meeting on Saturday. We also have the ECB rate decision on Thursday and Australian rate decision on Tuesday. But the big news today so far is the takeover of First Republic Bank by JP Morgan. The deal has gone through and JPM has just put out the investor presentation this morning. First Republic will operate branches as usual today as the deal goes through. JP Morgan agreed to assume bank's circa $92 billion deposits, including uninsured deposits, and substantially all of its assets, including $173 billion in loans and circa $30 billion in securities, but not corporate debt or preferred stock. The deal will be modestly EPS accretive. After Friday's run-up, the market is giving up some of its gains so far. I'm on the chart of gold because we've had an interesting movement on that in the past 15 minutes or so. But you can see today we've not really had much going on at all after a really strong Thursday and Friday, holding on to the ascending trend line. You can see here after being able to regain that after the mini banking crisis. We've seen a move into the yearly highs, rejected off, then back into that ascending trend line, then bounced on there on Thursday, Friday, moving back into the yearly highs. And you can see how big this level is. Quite a lot of price interaction, rejections off here in the past 12 months. This was May last year. Again, you can see September of this year, and this was the current year. So you can see this has been a big problem area for the S&P, and because you're getting this ascending trend line moving into it, you got this sort of triangular formation here. Some might call it a wedge, some might call it other things. I'm just pointing out what I see on the charts, and you're getting this consolidation near the end. And it's a case of, have we got enough reasons to break through? And it's just perfectly poised for the week ahead with everything that I just mentioned coming through. Interestingly, implied volatility for the week is slightly subdued, 3.7% move priced in for Apple this week. But apart from that, Nasdaq, S&P volatility, at least the implied volatility, is quite low relative to the events that we do have this week. Probably because no surprises are expected in the Fed, in the ECB. Everything's already priced in, 25 basis points, all that kind of stuff. Possible hawkish message. Market's already kind of accepting that. Apple earnings Thursday could be key for which way the S&P goes, and Nasdaq in particular. And then Friday jobs data. We've got JOLTS job openings before then as well, and the ADP non-farm payrolls before. I think that's on Wednesday. So, catch your breath. Asian markets were mostly higher today. Very quiet trading, though, it must be said, with most markets closed for a holiday. Japan fared well with the Nikkei and Topics both up circa 1%. China manufacturing PMI unexpectedly fell into contraction territory in April. Alibaba founder Jack Ma, he's taking up a teaching post in Tokyo. Like I mentioned, in Europe, major European markets closed for a holiday as well. ECB's rate decision on Thursday will depend on the two reports coming out on Tuesday. That's the bank lending report and the Eurozone inflation report. In Americas, not too much apart from the major news that I just discussed with JPM and First Republic Bank. We've got OpenAI reportedly completing additional 300 million of a funding round at a valuation of 27 to 29 billion at OpenAI. ChatGPT, it's been the talk of the year so far, really, hasn't it? AI. So yeah, what have we got today? We've got ISM manufacturing PMIs out of the US. It's probably the highlight of the calendar. Like I said, gold just catching a bit in the last 20 minutes or so. This was just after the comments have been coming out across my Twitter feed of from Jamie Dimon. I'm unsure if it's related specifically to what he's been saying, but we've definitely seen this spike whilst those comments were coming out. But his comments were, the system is very, very sound, and that we're near the end of it. So yeah, interesting is the market. Why am I talking about this with gold? Because remember the last time gold was spiking quite significantly. It's been in a range now, really choppy for a while. Don't know how far I'm going to have to go back here. Let me put us on the 4-hourly so we can see a bit of a bit further back on our screens. And then we'll talk about long term. So you can see gold has just been completely choppy now for a little while. I'm going all the way back probably to this area here where we saw that sharp spike higher. A lot of this was Credit Suisse, was SVB collapsing. People were going for a flight to safety to gold, flow out of the US dollar, and you're seeing some of that flow out of the into gold. Sorry, here just in the past hour, past half an hour. And you can see it's not really because it's out of the US dollar, because the dollar yen is still higher on the day, not really moving lower as we speak. As we speak about the dollar yen, you can see we're coming into quite a big technical area here. You've got the current yearly highs at 137.70. You've also got the 200-day moving average, which is where we've just stopped for the day so far. So this is an absolutely key area overhead. Can we get through to retest that area? It'll be a big question of are we in double top territory and we start giving back some of that again. A lot of that could depend on how hawkish the Fed are this week. My bets would be for a fade of this dollar yen move, to be honest, from here. Looking at oil, you can see 75 right now. Rally on Friday. That's them gains are being given back to the market. I did say once we're below this sort of 76.20 area, I'm bearish and looking for moves down to 72.50 on crude. So that's where we're at. Market's really interestingly poised ahead of a really big week. ISM manufacturing PMIs to kick us off today. And that's pretty much it. Yeah, I think what I'll do is I'll post any other updates inside the chat room. If you view the news tab here, I just gave a bit of colour onto the First Republic Bank and JP Morgan. Just a few thoughts and notes there from my end. But I'll wrap things up there. I'll see you all tomorrow. And yeah, European session brief with European markets back open. See you then. Take it easy and bye for now.